We're
Hello,
live.
hello.
Hola. We
Ya te
are.
extrañaba, ya pasaron 2 semanas.
Oye, más, yo creo. Como que unas 2 semanas o tres.
Es que
Ay,
es el
dile.
verano, todo el mundo de vacaciones. Hay que disfrutar la vida.
Ya sé. Oigan, pues we are back with After Hours Real Estate, answering all of your questions that you may have with the purchasing or the selling process. We have an expert lender here. I'm a real estate broker, 11 years. We have Ana Cabrales with Cabrales Mortgage. Hi, Ana.
Hello, hello, hello.
And I was gone. First of all, I was on a vacation with my family. Then we were just busy. I mean, it just didn't, one thing and another.
It
And
happens when you go on vacation, you come back to double the work.
exactly, double the work. So I wasn't being able to be here for you guys, but I know that you might have questions. So we're still going through the steps to buy a home. So first of all, I want to begin with Anna wants to talk to you about someone very dear to her just purchased a property, right? So then
Yes.
we can go with, with the questions, right? With the questions that everybody has, which is, should I do this right now? Should I not do it? Should I invest? So what's going on, Anna? But tell us a little bit.
From my post on Instagram.
Yes, you know how they said I have some questions. I mean, like everybody's asking the same questions. Is it a right time to invest or should I wait because of the interest rate? So
Mhm.
then the answer is
It's always a good time to buy. My
it's always.
sister just closed on her house today.
I know her.
Yes, yes.
Congratulations.
He has a house, so she's not a primary homeowner, but a house in front, kind of in front of my mom's house, came
Ah,
up for sale.
I know
So
that house. I
yeah,
remember. I remember you mentioned.
yeah. So she bought it, and so she's gonna be relocating, and we're excited for it. It wasn't the best interest rate, I can tell you that, but we're not scared. We see it every day. The interest rates are in the fives, and she knows that it's still a good investment. She knows that a year ago, she could have gotten interest rates in the twos and threes, and now in the fives, but it's still okay because it's a long term investment. She knows that the house is going to continue to value, appreciate. And then if the interest rates do come down like they're expected to in the future, she can always refinance.
Yes,
So
definitely.
it's a good investment, and she's happy to do it, and it's a good time.
So the reason why I'm asking Ana that, amigos, is because I know that a lot of buyers right now are waiting, right? They think that this is not a good time to buy and they want to wait. This and that. So the reason why I'm asking her is because it's always a good time to invest. Because exactly how she explained it, right? It's a long-term investment, so she can refinance, and we know the property value it will continue, going up. So
Mhm.
was she afraid? No. So if you're listening to us over there, right? I mean, anyone that is, in the fence of buying, please consider buying, right? We have a lot of different options, a lot of different properties that you can look at. And don't be so worried about the interest rate, right? We used to, buy properties with higher interest rate.
Mhm.
Like me in my case, when I purchased my
Me
first
too.
house, it
Me
was
too, my
what?
sister.
It was, I don't even remember, but I know it was higher than 6%
Yeah.
when we used to buy houses back then. So then, it's always a good time to buy. So
And I always tell people, like, I guess people always see it like, oh, it's a long term investment. I need to get the best deal. But nothing is finite. You can always refinance. You can always live in the house for 4 or 5 years, then later on sell it, hopefully make some money, use that money to buy something bigger or better. Or sometimes people downside and buy cash because they have a lot of equity. So
mhm,
don't see it as whatever I do right now, it's gonna dictate the rest of my life. No, because you can always do things. You can rent it, you can sell it, you can sell it by something newer, sell it by something smaller. It's not a thing that is gonna be there for the rest of your life. I always think like most people move houses within 5 to 6 years, 7 years.
mhm.
So but I guess the first time is the scary part. But then after you get your feet wet, you don't see it as scary. So then you're like, let's sell this one, buy another one. Let's sell this one, buy another one.
Exactly. The idea is to have a lot of properties together. And I'm so happy that your sister said, now this is my fifth property. I mean,
Mhm.
that's amazing, right? That she's building her what is it called, the real estate portfolio, because remember, the wealth is in real estate, investing in real estate. So we're here live. I mean, we have an expert, Ana Cabrales, here with the Cabrales Mortgage. I'm an expert in real estate. So if you have any questions, we are here. I mean, ask us, right? This time is for you, everybody. And the topic for today is going to be appraisals. The last time we talked about inspections, and you know how appraisals can, I guess, is the most important part of a buying a property. And I guess it's kind of like a love-hate relationship with them.
Mhm.
So we're gonna talk about it, right? It is the most important part, but it's also the part that it can basically make you go out of contract, right? Because if property doesn't appraise, lender cannot lend you the money. So
Yeah.
we have an expert right here that is gonna give us tips. Then I'm gonna give you tips on real estate, right? But we first need to hear the tips on lending, and then you have any questions, let us know. Anita,
I
tell me.
think I should have like a margarita or something for this topic because appraisal sometimes
I know
they're a lot of work.
it's a
But
lot.
something that I guess I can explain how appraisals are done. Once you're under contract, a customer's under contract and they're under the option period, we find out, are they doing inspections? Yes, they're doing inspection. Okay, so we wait a little bit to find out how the inspections went. Inspections went great, or things have been renegotiated with the seller. So we move forward with ordering appraisal. Usually we place the appraisal on a website. We don't call ex appraiser and say, here's an order, because we're regulated as to what communications we can have with the appraiser. So we put the order on a website, and basically it's like a roulette. The order goes out to the appraisers that are in the panel, that are in the area. And then we see in the system that one of them picked it up. One of them said, I'll do this order. So in my system, it'll say appraisal has been accepted. It doesn't say by Juanita. It just says appraisal has been accepted. They don't want to tell me who's doing the appraisal. I guess because they don't want me calling and saying, "Hey, how's it going, Luis? I saw that you getting the appraisal. Let's go to dinner. I'm gonna take you out or whatever." I guess. So
Yes.
I see that it's been accepted, and then usually we get a due date. Okay, the due date is, let's say if I was placing one right now, it'll probably be the end of the month, because usually most appraisals take, I would say, 2 weeks to get done. Sometimes when they're outside city limits, sometimes they take a little bit longer, but let's say 2 weeks. So I have a due date. Then the appraiser calls the listing agent and says, I'm going to go look at the house on Thursday at 10 a.m.
Mhm.
So then somebody's usually there to open the house for the appraisal. So now in my system, it's going to say inspection scheduled for Wednesday at 10 a.m. On Wednesday afternoon, usually my system will change to say inspection completed.
Okay.
They've gone and looked at the property. Well, usually when they go and look at the property, they go fast. They go in probably 10 minutes. They take pictures of all the bedrooms, the bathrooms, the kitchen. If it's FHA, they open the faucets, make sure the water is running. They flip up the switches to make sure that there's electricity. They take a picture of the backyard, the front, and then the street. If it's FHA, they also look in the attic. So I guess I would, maybe something you can talk about whenever they go do the appraisal. Sometimes I look at the reports and it's like, oh my God, they should have closed the toilet lid, or they should have done the bed, or
Yeah.
done the dishes, because I think a lot of it is perception. So if the appraiser walks in and the house doesn't look tidy, um, maybe the appraiser is not going to value it as much as somebody when you walk in and it's a house that's very well taken care of. Maybe the appraiser is going to say, like, they feel
Definitely.
good doing the report.
Exactly. Like what we do in the real estate side, right? This is the lending side. The real estate, me representing the seller, we usually tell them, well, if the house is vacant, we, even though it is an FHA home, we
Mhm,
still home stage the property, and we don't remove the home staging until
mhm,
after appraisal,
mhm.
because we have find out that if the house is staged, let's say if it is vacant, right? The appraisals, exactly how you just mentioned, is about perception. So
Yeah.
then the appraisal is going to give us more value for it because it looks cleaner, well prepared, it's not abandoned. Another thing that we do, I mean, as another tip for you sellers that are listening, we do a list of all the improvements. I mean, if we have replaced the water heater, we have replaced the AC, we replaced the roof. I mean, I'm giving you examples. We painted interior or exterior. We changed the ceiling fans. Anything that we did in the house, it doesn't matter how small it is that you think it is, it will still come for an appraisal. So we do a list and we leave the list on the counter because we're not supposed to be there as well, right? I mean, because it could be a conflict of interest. So we just give him the list. And sometimes we also, I mean, if we have access to them, we try to email it or send it through text just in case he didn't see it. Now they use that letter, right? And that will be for the benefit of the seller because the price of the property will come higher. So those are the things that we usually do. Plus another thing that we do, Anna, is actually do that before what is a list in the house is look around the property. If we see any wood rot, if we see anything that it will be unsafe, any stains, so I mean on the anything that we think this is gonna affect, we prevent the issue before going into the market, right? So those are very good tips for you sellers that you're listening. If you know that water is not running, if you know there's wood rot, just try to fix all of that because you'll end up losing the buyer.
Yeah. And I think the list that you mentioned with the upgrades is an excellent because it helps us. It helps us when if a value doesn't come to what it needs to disputing the value because we are saying like this property, even though it's from 1978, it had
Yeah,
all these upgrades.
exactly.
So after the appraiser goes and looks at the property, when they go to look at the property, I forgot to mention, they have a copy of the contract. So
Yes.
they have a copy of the contract and they know that the house is selling for 200,000. So they kind of know what the value that we need. But then they go and look at that property, they go inspect it, then they go to their office and they do a report on what the property is worth. And the way that they do it is, let's say that the property is on Main Street in McAllen, let's say 100 Main Street, and it's a residential. The appraiser is going to look at properties that have sold in the vicinity in the area, usually not past 270 days, a lot of times 180 days and less. So they'll start in a half-mile radius from the subject, from the one that you're purchasing. And then they'll if this house that you're buying is 3 bedroom 2 baths 1,500 square feet, they're going to look at houses that are 3 bedroom 2 baths around 1,500 square feet. They won't look at houses that are 2,000 square feet. Even though 500 doesn't sound like a lot, they try to look at houses that are very similar to the what that you're buying. If your house is older house, they're trying to look at houses that are similar in age. So they usually don't compare a brand new home to an older home. They'll try to keep them apples to apples. So they'll look in a half-mile radius. If they find comparables in that half mile, then they stop and they don't go past that. If they don't find, then they go 1 mile, then 2 mile, then 3 mile. If at 3 mile they find, then they stop. They don't have to go more. The most that they go out to look, it's 5 mile radius. And this is a question that I always get. Sometimes a value comes in low, and then the seller will say, well, why? Because this other house just sold for 210 and mine came at 200. And I go back and I look and I say, yes, that one sold for 210. Unfortunately, there was 10 that sold like within 2 blocks from your that were 200. So they're going to look at the ones that are closest to you first. And if there's sufficient already data, then they don't have to go and look at other ones. And that's something very important. A lot of people say, well, houses are selling at $140 a square foot. And they say, okay, so if this house is 1,000 square feet, this house should sell for 140,000. But it doesn't work like that. It works by houses that have sold in the vicinity. If
Correct.
the vicinities are selling for 125, it doesn't matter that others are selling at 140 because they'll stop. So sometimes the location matters.
And
Sometimes I've had houses that sometimes like if this house was located over here, it would be $50,000 more. But it's just how things are selling. Uh,
would you say 6 mile radius for the comparison of the
five,
home?
five is a maximum.
I'm
But most of the time, I would say we see less than one If there's a lot of comps, maybe two, three. It's rare that we find five. Sometimes when they're like in the outskirts or ranchitos or
Mhm.
houses, let's say you're selling a house that has a detached quarters, like mother-in-law quarters. Sometimes they'll have to go further out because then they have to look for some that have that type of uh, the structure. So, but usually no more than five. They
Mhm.
also say that they try not to cross boundaries. What I mean by that is if you are selling a house south of McAllen, south of Expressway 83, they'll try to look for comps south of Expressway 83. So
Mhm.
usually they try not to, let's say the house is by the mall, they try not to pass the expressway. They try to stay within the same on I-69. If you're selling houses on that side, let's say on Veterans, they'll try to look for comps on Veterans. They won't come to
Mhm.
this side, to the west side of the expressway. They'll stay. Um, they don't cross major boundaries. Usually, I have seen some appraisals that do cross boundaries, and usually they're appraisals that are trying to help come up with the value, but the
Yes.
majority of the time they stay wherever the quadrant is, I guess, on the expressways.
Expressways. Okay, so then for our buyers and sellers that are listening right now, buyers cannot be present during the appraisal. Usually, appraisers, go by themselves, right? Sometimes buyers, let's say sellers are there because they live there, but usually they're not. We usually try to advise the sellers to not be in the house, right? And to give them the code, the way they can do an appraiser correctly and they're not pressured. Because remember, if you're there as a seller, the appraiser wants to leave as soon as possible because he feels uncomfortable. So how is that going to help you? It's not going to help you. It's going to like really be detrimental to the value of your home. So I have a lot of sellers that will tell me, can I stay? I usually tell them, you can, but it's not recommended.
They won't talk to you. The majority come in and out, and then sometimes there's sellers that want to talk to them and say, like, explain the house. They won't. They're like, I'm just here, I'm going in and out. Like they will ignore almost all of it, and I hear it all the time, and just that's just the way they work. They work independently. They don't want to be pressured into a value. Now they will listen. Let's say a value comes in low, we have a rebuttal system, reconsideration of value that we call it. So basically, we would say, if there's discrepancies, we would bring them up. Okay, you mentioned these three bedroom, but in reality there's four. You put two bedroom, but in reality there's three. Or you thought that the house was 2,000, but in reality it's 2,200 square feet. Here, you have to send evidence. Here are the pictures, or here is the blueprints, or you got three comps that are in a 1 mile radius, but guess what? We have some that are closer, they're half miles. So why didn't you use these? So we do have a process. Sometimes they make mistakes and they own up to them. They fix them, and sometimes they'll say no, like the ones that I chose are better comparables to your subject property than the ones you sent me.
So
So there's still like, some communication.
what percentage would you say? Because I don't want them to get that wrong. Our buyers friends and our seller friends that are listening, uh, in your experience, right? How often or what percentage would an appraiser change his opinion in value?
Very little.
Very
So
little.
I
Yes.
would say first, not a lot of appraisals come in low.
No.
Uh, we had like a rash of appraisals that came in low when the market was shifting, when prices started to go up. We got some appraisals to come low. Why? Because the market is still adjusting. It was still adjusting, so we had some that were low. But now that everything's settled, is rare that we have a low appraisal. Now I have had some appraisals that come in low, and when I make the call and say, hey, guess what? The appraisal came in 5,000 low. A lot of times the response is, oh, we knew it. Oh, we expected it. And it's like, well, then why
Well,
you?
that is a great answer. Okay. If your seller is saying that, it's awesome you already won. That means that he is flexible in
Yes,
adjusting the price, right?
yes. And most of the time, if they come low, most of the time we're still able to salvage the deal because the seller and the buyer will come to an agreement. You know what? Seller will, let's say, came in 5,000 short. Seller is gonna drop it 2,500. Buyer is gonna pay the extra 25. Or guess what? I'll go ahead and the seller will drop the 5,000, but they're no longer going to leave the washer and dryer or whatever. Sometimes they make arrangements to make it work. The seller wants to sell, the buyer wants to buy. We want to help them close. The realtor wants to close the deal. So we all come together to try to make it work.
Correct. So don't feel
So we
too.
don't get a lot of denial or low, but when we do, and we have to like do a reconciliation of value, maybe 1 out of 10 will work, maybe 2 out of 10 will work. We really have to have data. We cannot just say we don't agree with your value. No, we have to provide data. Okay, look, these are some comps, these are better comps, these are similar or the same builder or the same subdivision, or you forgot to give adjustments for the barbecue area outside or for the pool, or this one has a fence, the other one doesn't. We have to show data, otherwise they won't change it.
Yes, definitely. So then we have, then again, just to give you a summary, appraisals are coming, a lot closer, right? They're appraising, let's call it like that. We used to have that issue in the past when the shift in the market after the pandemic, right? That they were coming up with a value on the property, then we'll see discrepancies. But I mean, after a while, we've noticed that our appraisals are coming or are meeting value.
Yeah.
Now, what are the strategies or what are the steps or the solutions, right, when it doesn't appraise? Obviously it is the most important part of the process. If it doesn't appraise, lender cannot lend you, I mean, the money, because it's not the, let's say for example the house is 250 and it appraised to 245, so there's $5,000 difference. So what are the options there? Exactly how Anna said, right? We try to negotiate and mediate between the buyer and seller, right? If the difference is $5,000, we try to bring up maybe the buyer a little bit if the buyer is available, and then we try to lower, right, the seller. So kind of like meet in the middle, or kind of like Anna said, right? They were gonna leave the washer and dryer. They will take the washer and dryer, or I don't know, title insurance policy is paid by, let's say in this case, the seller. We try to find a way that way you're able to be successful, okay,
Yes.
and continue and not lose everything, right, that we've achieved until now. So then we'll find ways. So those will be some of the things that we've noticed, right? Either lowering the value, giving you credit, or meeting in the middle.
Yeah.
But don't feel so discouraged, right? If something like that happen, we have some sellers that are a little more firm in the price, but I mean they're few, right? I mean, we can still find a way to help you buy the property. uh,
Another question that I get is what happens if the property appraises for more?
oh
Are,
yeah.
is the seller gonna change my price? And
Yes.
the answer is no, because the appraisal, after they go and look at the property and they go look computer and look for sales, they turn in a report to us, and that report goes to the buyer. And that report is usually, I would say, 30 pages, and it has all the information on the house, the comparables, and how they came up with their value. So that report, it only gets seen by the buyer. It doesn't get seen by the seller. It doesn't go to the county. It's a different appraisal than the county. The county has valued the house for a certain amount. This is an appraisal just for the transaction, for the loan. So it's just internal to us. So nobody's gonna find out what the property valued except for the buyer and sometimes the buyer's agent. But if the house appraised for higher, that just means that you bought a really good deal. That's
Exactly.
all that it means. You have equity in your house. You can turn around and sell your house and make some money. So it's just a good deal. It's a good feeling that you're making a good decision and buying a good investment.
Okay, another thing that we can do also with that equity, and now you have equity. Hold on, let me
So,
just write a note. Now you have equity. Okay. So the another thing that we've done in the past is if our buyer is struggling with, usually they should have the money, but sometimes, if they're short in the money or they want to buy, I don't know, appliances or furniture when they move into the house and the house appraised a little higher, then we try to amend the contract, right? Basically, we'll send you an amendment to the seller, okay, and we'll say, can we rise the price, I don't know, $3,000 or 5,000, whatever it came higher. That way we can get that money. Buyer gets the money, and buyer can use it for whatever he needs, right? Closing costs, I don't know. anything that he needs. So then that's a big plus for you when you're buying a home and it acquire that it has equity. Okay,
Correct.
you can use it for closing costs. So that is something that if buyer is, I mean, seller is in agreement, and usually seller is, because it's not really gonna affect him. He's still gonna get the money that I mean, the money under contract price, right?
Yeah.
He's just helping you. You get a little bit more money back from the
Mhm.
loan. That way you can buy appliances or closing costs or furniture.
Yeah.
Mhm.
And I guess a last thing that I can say is there's difference between conventional and FHA appraisals. Appraisals are FHA a little bit stricter. The property has to be in a little bit better condition. It has to have flooring, even if it's ugly. It has to have flooring, working water, electricity. It cannot have broken windows. It cannot have exposed wood that is just raw wood. It has to be painted. It cannot have rotten wood. Unconventional, it's a little bit flexible. The floors don't have to be covered. It doesn't have to have electricity. Um, they don't have to have AC. So there's differences in conventional and FHA. So a lot of times when customers ask why does the seller only want conventional offers or cash, that's the one reason. Sometimes it's because the house won't pass an FHA appraisal. So and the seller says, you know what, I'm not gonna go install flooring. I'm gonna set it like this, or I don't want to connect the electricity. I'm going to select conventional. So that's sometimes one of the reasons. And sometimes the property may pass FHA, but it's just that the seller wants conventional. That
Correct.
might be another yeah,
And
reason.
another thing that sellers have told me personally is that they feel, I mean, which not necessarily, right? But they feel that maybe if the house doesn't appraise, the buyer is going to have a little bit more money saved in his bank account because he is not only counting on a 3.5% down payment. So
Mhm.
that's what I've heard, right? They said, I mean, but not necessarily. Not because you use an FHA loan, that means that you only have 3.5% down payment,
Yeah,
right?
I think on FHA, we have what's called a third party financing addendum. And I think it also says that if the property does not appraise,
Yes,
then the buyer can back out. In a
exactly.
conventional, the only way that they can back out is if they do like a subject to appraisal addendum or something like that.
It's the appraisal, right? It's subject
Appraisal waiver or something like that.
waiver. Yes, appraisal.
So
And it's
that's also a reason why a lot of times sellers want to go conventional because they're like, if the property value is for less, the buyer can still buy it.
exactly
They're not they don't have the option, I guess, to walk away unless they do that waiver thing. So
correct.
so they're just different things.
Mhm.
Which one's better? It just depends on your scenario and your goals. I bought FHA, I bought conventional, so it just depends on your situation at your time. I don't think I've gotten the question, would the same house value differently FHA and conventional? And I don't think so. I think the house is worth what it's worth, regardless FHA or conventional.
Yeah,
But
no.
I think that's a question that sometimes people think that conventional will appraise higher. I don't think that's the case.
And a house, I mean, yeah, to close on appraisal, if you have any questions, let us know. You can call us. If you have any more or you need any more tips about appraisals, I mean, I mean, raise the value of your home and how to actually pass the appraisal, let us know. We're here to help you. But Anna, another thing that I wanted to close this section with is how is the market as far as the lending, side? I mean, how are you looking at the market now? I mean, as far as a little
I
bit of
mean,
everything.
the interest rate had gone up and then they came a little bit down. So that's a good thing. It's a relief. Um, it slowed down some, I could say. Usually the summer is the peak season. It's everybody's buying and moving and relocating before school starts. It has slowed down some. And I think it's just sometimes people got tired, maybe not finding houses. Then I think people got a little bit scared because of the interest rate. But it's lower, but it's still steady. It's still good. We had a meeting on Friday, and there's indication that the later part of the year will be a good quarter. So hopefully that's the case.
Mhm.
There's already talking about interest rates coming down a little bit more. towards the end of the year and for the next 2 years, like 2 years from now. So I'm always telling customers that say, well, I'm just gonna wait to buy a house. I always tell them, buy whenever you get pre-approved, and then you can always refinance if you have to. So don't, because the house right now may be worth 200, maybe 2 years from now will be worth 220. So it's one thing or the other. If you qualify right now, why wait? Why rent?
So
Purchase a house now.
you say the interest rates will go a little bit higher or will stay the same?
The Our CEO said that he thinks that like around December they may come down a little.
Ah, came down. Okay, they're gonna come down a little. And then that's when you notice people probably waiting. But exactly how you just said, right? The pricing of the value of the property is the same, is relative, is one thing with the next,
I
right?
had a customer that pre-approved late last year and she qualified for one amount. And then she came back now and she's like, okay, I'm ready. Well, she qualified for $20,000 less. And she's like, what happened? It's like rates are different than when we quoted you. And that's the problem, that you have to adjust everything. Yes, it just buy, if you qualify now, buy the house now. Why? If you're waiting for 2 years from now, the same house may be very different price 2 years from now.
Also, I've noticed the monthly payment, Anna. The monthly
The
payment.
monthly payment will change. So buy a house now, and if you can, and the interest rate do come down, you can always refinance. And if not, any money that you give extra to the payment goes automatically towards principal. So
Mhm.
you only pay interest until you liquidate the loan. If you're paying faster, 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 you don't have to pay all that interest because
Exactly.
you're paying faster. You're applying it towards the principal.
Okay. Okay. So if you have any questions, thank you so much for watching After Hours Real Estate. Please share this video. If you know someone is out there buying a property or trying to sell a property, this is very important information that benefits both. And if you have any questions, Ana Cabrales is here. I'm here. You know how to find us. And thank you so much for watching. And we hope to see you next Monday.
Take care. Nice to see
Thanks.
you.
Bye.
Bye.